Got it. All right, Devin. Thanks for that. But let's move on to another stock. Sundram Fasteners, that's passing in trade. It's up close to 4%. Also has hit a record high today. Sonia joins us to tell us more on that. Sonia?
Well, I'm tracking Sundram Fasteners today. It's a TVS Group company and the stock is sitting at a fresh record high. In fact, if you look at it, the stock is now up almost 50% from the June 2022 lows, and the average traded volumes are also very high today. There's a 2 times jump in the traded volumes on NSE today against a 3-month average, so it's doubling of volumes that we've seen. Now, Sundram Fasteners is one of the largest fastener manufacturers in India. It manufactures high-precision components across sectors for autos, for infrastructure, windmill and the aviation sector. And not just fasteners, it also provides metal components, cold extruded parts and forgings to auto OEMs. Now it enjoys a very high market share of around 35 to 40%. In fact, it is the largest fastener manufacturer in India, and the earnings growth for Sundram Fasteners has been very strong. In fact, in the first half of FY23, it's seen a revenue growth of almost 20%, and it has a good 400 crore capex plan over the next 2 years that it came out with on the back of higher demand. Now, there's a big electric vehicle play here as well. The company's Sri City unit has commenced the supply of products for hybrid and EV applications, and there are 150 crores worth of orders that the company has already bagged for EV products. It also expects to sign contracts worth over 200 crores for new electric vehicle products, and hence it is this EV play which is causing more interest in the stock. Stock is at a fresh record high today.
All right, Sonia, thanks a lot for that. So that is one stock which is at a fresh record high today. That's about Sundram Fasteners. But one sector which is showing a fair amount of resilience today is the FMCG pack, and that's on account of a couple of factors. The first one is the fact that we are seeing a decline in crude prices. Secondly, the updates that have come in from both Marico as well as GCPL aren't particularly bad. In fact, if you just take a look at the Marico update, the India business for them has posted mid-single-digit volume growth. Revenue is in low single digits. That's because of the price cuts that they've affected on account of the decline in copra prices. Gross and operating margins for the company are likely to improve both year on year as well as quarter on quarter. That was a worry up until the first half of this year. So second half looks like margins may improve. They expect modest growth in operating profit as well. For Godrej Consumer, they've seen poor rural consumption and they've seen some slowdown post-festive season. But for them, the 3 problems that they had was, one, weakness in the India business, secondly, weakness in the Indonesian business, and thirdly, margin problems. All of that seems to be ameliorating, if not having gone back already to pre-COVID levels itself. They've seen double-digit sales growth in India business with low single-digit volume growth. They've seen gradual recovery and sales decline in low single digits in Indonesia, while Africa as well as the Middle East cluster continues to do well for them. What they've seen overall is high single-digit EBITDA growth on the back of gross margin expansion, but some of those gross margin savings going back into marketing as well. The important part, however, is that the next quarter, the outlook looks better than anticipated on rural recovery. Despite the weakness that we've seen in the first 9 months of this financial year, everyone's eyeing easing of commodity inflation as being one big trigger. Secondly, higher crop realization would aid the pockets of farmers, so that could aid consumption going forward. Ongoing government interventions to boost consumption, and we're talking about 20 days ahead of the budget, likely stimulus in union budget to go ahead and improve rural consumption could be one of the themes that everyone's betting on as well. And as a result of which, not only Godrej Consumer and Marico, all the other FMCG stocks are doing well in today's trading session. Devin, your thoughts on the FMCG pack today and the updates that have come in?
Well, I think we have been counting on this particular possibility for some time, that with the gradual fall into the food commodity prices, it is going to basically result into the higher amount of margin impact for some of the FMCG companies who are into the food segment. Also, those who are into other than the food segments in personal care, house care, I think where the raw material prices have come down. For them, I think the margin stability is more important. So third quarter should be reflecting this particular possibility of stable margin. And thereafter in the fourth quarter, along with the growth happening from particularly rural segment, one should be seeing the dual impact. On one side, the growth related revenue upside, and also I think the stable margin environment should result into better profits for these companies in general. I think some of the companies are trading at an adequately decent valuation. So maybe I think there may not be an immediate opportunity for buying into them. Correction in the price is always good opportunity to buy some of the expensive counters. So one will have to wait till such point of time if one really wants to buy at a bargain level.
Deven, do stay on. Need to slip into a very short break, but the pullback continues in the markets. It's 17,960 on the Nifty, which means a 70-point recovery from the day's low. On the mid-cap end of trade, things are getting stronger. Schneider Electric has risen 7.5%. JK Tyre, rubber prices cool. JK Tyre accelerates. That's up close to 5.5%. PFC REC too, seeing some interest in the last 10 minutes. Get into a break. We'll come back, continue our chat with Deven. We'll also invite Rupen Rajguru of Julius Baer on the